Retirement requires financial planning for a secure future. This video explores 5 low-risk investments for retirees, including bonds, CDs, dividend-paying stocks, and real estate investment trusts, to provide a stable source of income. 1. Bonds. As retirees shift their focus from accumulating wealth to generating income, one investment option that deserves their attention is bonds. Bonds are debt securities issued by corporations, municipalities, or governments to raise capital, with the promise of paying interest to investors at regular intervals, usually semi-annually or annually. One of the advantages of bonds is that they offer less risk than stocks, as they are generally less volatile and have a fixed maturity date. Additionally, bonds are rated by credit agencies based on the issuer's ability to repay the principal and interest, with higher-rated bonds offering lower risk and lower returns, and lower-rated bonds offering higher risk and higher returns. Government bonds, such as U.S. Treasury bonds, are considered the safest bonds, as they are backed by the full faith and credit of the U.S. government. Municipal bonds, issued by state and local governments, are exempt from federal income taxes and can offer higher yields than government bonds. Corporate bonds, issued by companies, can offer higher yields than government or municipal bonds, but carry more risk. Retirees can build a bond portfolio that matches their financial goals and risk tolerance by diversifying across different types of bonds, maturities, and credit ratings. Bond mutual funds or exchange-traded funds, ETFs, can provide exposure to a variety of bonds, making it easier to achieve diversification and manage risk. 2. CDs, certificates of deposit. Certificates of deposit, or CDs, are a popular investment option for retirees seeking a low-risk investment that offers higher interest rates than traditional savings accounts. CDs are a type of time deposit, meaning that they require investors to deposit a fixed amount of money for a specified term length, ranging from a few months to several years. In exchange, the investor receives a fixed interest rate, which is typically higher than the interest rate offered by savings accounts. One of the advantages of CDs is their low risk. FDIC-insured CDs are backed by the full faith and credit of the U.S. government, up to $250,000 per depositor, per insured bank. This makes CDs a reliable and secure way for retirees to earn a predictable stream of income, without worrying about market fluctuations or interest rate changes. CDs can also be a flexible investment option for retirees, as they can choose from different term lengths based on their needs. Short-term CDs are ideal for retirees who need quick access to their money, while longer-term CDs can offer higher interest rates, making them a good option for retirees who don't need immediate access to their funds. 3. Dividend-paying stocks. Dividend-paying stocks can be a reliable source of income for retirees seeking steady returns. Many companies pay regular dividends to their shareholders, providing investors with a predictable stream of income. Dividend-paying stocks are generally less volatile than growth stocks, as the companies tend to be more established and have a track record of stable earnings. While dividend-paying stocks can offer a reliable income source, they are not without risk. The stock market can be volatile, and dividend payments are not guaranteed. Companies can reduce or suspend their dividends at any time, especially during economic downturns or if their earnings decline. Retirees can mitigate the risk of investing in dividend-paying stocks by diversifying their portfolio across different sectors and industries. They can also consider investing in dividend-focused mutual funds or exchange-traded funds, ETFs, which provide exposure to a diversified portfolio of dividend-paying stocks. 4. Annuities. Annuities are insurance products that can offer retirees a reliable source of income in exchange for a lump sum payment, or a series of payments. There are different types of annuities, including fixed, variable, and indexed, and each offers varying levels of risk and return. Fixed annuities offer a guaranteed interest rate, providing retirees with a predictable income stream. Variable annuities, on the other hand, allow investors to choose from a range of investment options, with the potential for higher returns but also higher risk. Indexed annuities offer a return based on the performance of a particular stock market index, with some protection against market downturns. Annuities can be a good option for retirees seeking a predictable income stream, but they are not without drawbacks. Annuities can be complex and often come with high fees and surrender charges. In addition, annuities may not keep pace with inflation, and the income payments may be subject to taxes. 5. Real estate investment trusts, REITs. Real estate investment trusts, or REITs, are companies that own and operate income-producing properties, such as apartments, office buildings, and shopping centers. They offer a unique investment opportunity for retirees seeking exposure to the real estate market, as REITs can be less volatile than individual real estate investments and offer regular income payments in the form of dividends. REITs are required to distribute at least 90% of their taxable income to shareholders, making them an attractive option for retirees seeking a steady income stream. They can also provide diversification to an investment portfolio, as they offer exposure to a range of real estate sectors and geographic regions. However, like any investment, REITs are not without risk. They are subject to market fluctuations and interest rate changes, and their dividends are not guaranteed. It is important to carefully research and evaluate individual REITs before investing, and to consider the potential risks and rewards. In conclusion, choosing the right investments for retirement can be challenging, especially for those looking for low-risk options that offer a reliable source of income. The 5 investment options discussed in this article, bonds, CDs, dividend-paying stocks, annuities, and REITs, can be effective tools for retirees looking to generate income while minimizing risk. However, it is important to remember that no investment is entirely risk-free, and careful consideration and consultation with a financial advisor is recommended before making any investment decisions. By diversifying investments and balancing risk and reward, retirees can create a secure and sustainable financial plan that will provide them with a comfortable retirement.